All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and I like to do these recaps on Friday a little bit more relaxing because the week is over. You can kind of reflect on the week, think a little bit about next week, some strategy for next week, do a little bit of review. We could do that today. I've got a couple things that I want to talk about, a couple examples. We could look at the technicals and the indices as well. Basically flat for the day. So let's talk about that first, and then I'll talk about. So next week, let me just bring this up first, and then I'm gonna get to this in a couple minutes. But so next week, what I want to do is a member webinar on trading options versus stock. Kind of the differences. I've been doing a lot more since really since the October sell-off to December sell-off, I guess you would want to say. I'm always kind of tinkering with my trading plan and looking to improve. And I learned a lot of things, despite me trading for, institutionally and, trading my own portfolio now for multiple years, but institutional trading for a number of years. And I started my trading all the way back in like 1999, to admit my age here a little bit, but I'm always learning, and I'm always thinking. I'm always, making improvements and learning lessons. And one of the big takeaways that improvements that I made from October is really figuring out my time frame and the most ideal trading plan for me, and that kind of encompasses a little bit more of trading stock versus options. So I'm going to talk about that next week. We're going to go over the advantages of trading options, trading stock as well, and a lot of times it depends on your time frame. Sometimes people have great trades, but they're using the wrong instrument. So I'm going to talk a little bit about that. For example, if you trade out for your average holding, or if you're a swing trader and you usually hold positions for a couple weeks, and you've got some really good trades, if you put on a front month call position, sometimes that's not the right position. You may get shaken out. You also have front month option trading. And if you're holding for a couple of weeks, it's probably not the best idea, considering it's the highest theta decay that you're swimming against. But if you're a short-term trader and you're day trading or you're holding overnight, maybe option trading is better for you than stock trading if you're really good at that. So it really depends on your strengths, depends on your time frame, and a little bit of your intuition too. Are you going to get your mental, I don't want to say capacity, but your mindset is probably a better word, right? I mean, if you're going to get shaken out of a position that you've done really good analysis, but you're seeing your P&L move around too much, then you can make adjustments for how to do that. I think it's really can be a difference if you're making money or you're losing money. If you're still, if you're setting up really good winners and setting your stop prices, your targets, but if you don't have if you're not trading with the right instrument, it could really make or break your P&L. So anyway, we're going to go over that next week. I'm going to talk about one trade that I did today, which was a loser today too. I know I like to talk about winners. Everybody likes to talk about their winners, but just as I said, I gave one of the recaps that I gave earlier in the week. I talked about Paul Tudor Jones and about his every day when he wakes up or before he goes to bed, I forget which one it is. He assumes that every one of his trading positions is wrong. And kind of looks at it from that aspect. So I talked about that. So it's kind of the same thing with me. I could talk about my winners for a half hour because we've had some great ones. I don't flash everything that I do. Here's what we do on a day-to-day basis. It's usually a couple different trades. Sometimes I don't add any swing trades if I really don't like the environment. But, we've had just a tremendous week. I think I finished up for January about 25%. In my trading account, and even trading a lot of stock. That wasn't. I probably traded more stock this month than options. Options were mainly very short term. So again, next week's webinar for that. So let me talk about. So hope to see you as a member. That will not be. I will not do that. A public webinar. This will be for members only. So I hope to see you as a member. $7.99 for the first week if you just want to check it out to see what we're going to talk about and to see how the trading room functions. Again, I don't post. I post probably about a quarter of 25% of what I do in the trading room, because I'm just not going to post everything on Twitter. Just don't do that. So anyway, S&P. A flat day, kind of look like I'll kind of give you the thoughts for the day to talk about, my thoughts for next week. But, I know that, it kind of looked like a couple times today we were going to break down a little bit, but you kind of look at the end of the day and it's just an inside day. That's all it is. Is the market running out of steam? I don't think it is. Could we turn here? Absolutely, but we're above value for the month now. So you could use this. You could use 2682 if you want to look at S&P. And again, we'll look at the 1-hour charts as we do every Monday when we get there. But for now, if you want to look at the daily charts, we are above value. SPY is right above value as well. It's going to be a little bit different look to it. I like looking at the S&P futures chart. Personally, but so 2681 is your support. That's also the 5-period moving average. We've talked about this. We did 2 weeks back. We did just pure digestion, and what you'll find on days like this, and even that goes on in my head too. It goes on in everybody's head. Are we going to turn lower? Sometimes we're anticipating that move that's going to be this, but we really didn't do anything here in price. We flirted a couple times. I've talked about the 5-period moving average, how it helps me a lot for my trading, right? That's the first signal. Once we break that there's an issue going on, and you could trim your risk there. Again, you have to, if that's what you're going to use, then you have to adhere to that. The Qs, same thing. There's no real reason to really get you bearish right now. You could look at all this and you can get hypnotized by all this, and this could tell you with overhead resistance, just as I've seen a lot of different posts for the last 3-4 weeks talking about overhead resistance, which has turned out to be garbaggio. But really, when the market turns, the market's going to turn. And you could do, if you want to anticipate, you can, reduce your positions, reduce your position size. There's things to kind of help you with management. But really, there's nothing telling me this is an inside day in the Qs. Right? So there's no meaning, if you're not familiar with what an inside day is, it's just kind of a continuation candle. There's no confirmation. There's no changing of philosophy on an inside day. But this is important to go over because I think people start to see a little bit of red and they want to jump to like, okay, what's going to happen? So here's one thing that I did. I wasted $100 today. Today was not my best trading day of the week. I probably overtraded a little bit, but everybody's human, right? So we broke value. We came back. We retested value. And then we sold off. And I think I bought some lotto puts today that were out of the money. I think they were the 166.5, which we just didn't get there. And I said it as soon as I put on just a $100 position, a 10 lot. And I said, that was it's probably a little bit too far. So we just had chop today. We just did not have the oomph. And I said it after I put the put position on. I said, we may just have a choppy day instead of like a breakdown day. I have to say, the one thing that was kind of interesting is Amazon was down almost 5.5%, and nobody seemed to really care about this. I don't know. Could it be that the FANGs are there's just less attention to them? Right. Really, I would rather have it that way. I don't want a whole bunch, a group of stocks kind of dictating what, 3 or 4 stocks, you include Apple. I would rather have it. I would rather have implied correlations amongst stocks low, right? So just because one stock goes down, it doesn't take the market with it. That's how I would prefer it. But Amazon, Apple, these are Microsoft. Those are your biggest weights. Google too. So they are the biggest weights in the indices. So they are going to move them around, but really not that bad. The one thing is if you kind of zoom out a little bit because you're looking at the 5 minute chart and you're like, oh my god, it looks horrible. We're really just we didn't. This is where we were on Wednesday, so maybe it's not that bad. It did run up into earnings, right? So it did. Amazon did run into earnings pretty decently. So that's the other thing is you kind of take the average for the week. And where's Monday? Monday's back here. So it's basically unched for the week. Maybe a little bit of a calmer way to look at it. It ran up crazy into ran up from 1080 to sorry, not 10. That's wrong. 15, we'll call it 1590 was the low point on Wednesday. Or is this Tuesday? To the high point is 1720. So pretty nice move. So that's that. I showed the IWM chart briefly. Nothing really to tell you to kind of get short here either. So what did I do today? I'll talk about my position. So I think you just kind of let this. If you're feeling like this was a decent enough swing, you take off positions. You have a little bit more cash. That's what I was advocating kind of at the end of the day today. Why? Because Mondays, the last couple Mondays, and I don't have a crystal ball. I don't know what's going to happen on Monday. Bring up my Bloomberg screen if I can. Why is this not working? Let's try this screen. Still, Bloomberg doesn't want to come up. I don't know what it is with these videos. Bloomberg doesn't seem to want to cooperate. But I could tell you, if you look I can talk through the point that I was going to make. If you look at the past two Mondays, keep in mind, Monday we had a full week this week, but last week Tuesday was essentially the first day of the week. Both of those days the market's been weak. I think one day the S&P was down 1.4%. Another day it was down like almost 0.75%. So if you have, we know the market doesn't go up in a straight line. It doesn't go down in a straight line either, except for crazy things like this happening. But generally, we don't usually do that. So I think having some cash on hand, I try to purposely trim some positions. Sometimes you have to cut a couple names that aren't really breaking down. Just to kind of get yourself to where you want to be with cash, because sometimes we just add one or two too many positions. So I did that at the end of the day today, towards the end. I didn't catch the high point on some things. When some things are working, I got rid of IQ today. They report next week, so I'm not going to hold that name into earnings. And a couple other names I got rid of. QLYS. I just think at this point, taking some profits, scaling out. That was my target all along with QLYS. A few other names too in the software space that I talked about yesterday. Yes, they're seeing a lot of call activity, but as I mentioned, you could watch my video yesterday. I talked about how it's probably a good place to be taking profits sometimes when you see the call activity. It really is. I know some people will just rely on the call activity for entries. So here's what I did. I'll give you an example of something where I'm going to give this webinar next week on owning cash versus stock. Right? I've been liking the price action in the home builders for the last week or so. I haven't really done anything. And we saw this big DHI order that happened right before the close yesterday. Let me bring up yesterday's first. Right, big orders. I mean, this is $500,000 of premium. And this was not against shares. I checked it, so it's outright aggressive. I know people like to look at aggressive. They don't just like to look at unusual option activity, but they want to see when something's aggressively bought. They also bought the August 40 calls as well. Both kind of looks like a call stupid. A call stupid is when they buy multiple strikes. This one is actually the same strike but different months, right? Different time. They put this one up at 15 minutes before the bell. This one was 3 minutes before the bell. This one also went up. The May 42 calls going up. right? Maybe they rolled some Feb out, but again, you could see all the sweeps. And then today they came back in DHI. March 39 calls. They hit these twice right on the open. So what did I do? And I have not been following option activity recently. I've been kind of doing my own thing. There's a couple trades that I've actually followed. I followed the team trade earlier in the week, and I bought stock in that one. So here, in hindsight, and everybody makes mistakes in trading, so nobody's 100% perfect. I bought the same calls that they did. I knew as soon as I did it, I was like, hey, maybe I bought a little bit too much. Maybe I should have bought some stock, because here's where I would play this for a stock position. Maybe use the 50-day moving average as your stop, or the bottom of value, which is 36.28. However, you can't do that in options, because if you use the stop of 36.28 and you're in March options, that means your stop, the premium will be zero by that time, or what, maybe 10 cents. But here, you're only losing, what's the percentage change? The stock right now is 38, and let's say you use a stop of minus 36.25. That's divided by 38. Right? The difference is, if you use this, if the price happens to get down here and you get stopped out at 36.28, you lose 4.6% of your investment. If you bought the March options and the stock gets down here and you say, oh, geez, it looks like it's not going the right way, it's going to break down, you'll lose 90% of your premium gone on that. So you really, when you're buying March options, and I bought these options today, I bought them I paid a little bit over what they did. I paid $1.70. These things are marking today. I mean, the stock's down 1.2%, right? So it's a little bit of a sell-off, but this would be a non-event if I decided to buy cash. But they're marking down. I have a 15 lot. I lost almost $700 on this position today. So they're marking at 120. And again, this is not a February position. It's a March position. I still consider that short-term options. But we're looking at 1.64 minus 1.2 divided by my purchase price of 164. Yeah, I don't think I did that math right. 164 minus 120 divided by. It's around 30%. It's a 30% loss. The stock barely did anything today. It did sell off 1%, but in just hours. So it's really going back to the webinar that we're going to give next week. Really important, and people don't talk about that. There's a bunch of people talking about this order that happened today, but if you took it, you're down 30%. Or roughly 25, maybe 25%. It's a big hit, for just a 1% move. So, there's things to kind of be learned, and we're going to talk more about managing that, and also, whether you scale into a name. A lot of the times, if you are going after option flow, sometimes you can get in cheaper. But people, I'm always happy to talk about trades that don't work, because nobody will talk about them on Twitter. And believe me, there's a ton of them that don't work. Just people I don't know. It's like they just don't want to. It's like a fantasy world. All right, so kind of a mixed video for the end of the week. Again, my thought is, we'll continue. I'm still, position long, but just realistic about the move that we've had, and to trim some positions. I'll go. Oh, let me just go over, and we'll cut this video. I do like to go over my new positions. I got into I today. This is a name that I've watched before, but I really like the rising 200-day moving average, and bounce right on the 200. Rallies kind of got stuck at the 50-day moving average. hit this again, the 200-day moving average again, and now it's above value. So this is a nice. So why did I take this trade on a Friday, where on a day where I didn't want to add risk? Is basically because I had an alert set a while ago on this, looking for this break above. So the alert went off, and I kind of jumped into the name. I bought stock in this one. My stop is going to be really easy, 31.90. You could use the top of value stop, or if you want to have a little bit firmer of a stop, a little bit further of a way stop, you can maybe use the 50-day moving average. But 23.90 is a nice place there. All right, so that's it. Have a great weekend, everybody, and I'll talk to you on Monday.